Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Welcome to this week's episode of the Prime Property Finance Podcast. So this week, I'm very excited to bring our guest, Louisa Sedgwick, who is MD of Mortgages at Paragon Bank and also the Deputy Chair at the Intermediary Mortgage Lenders Association. So a very distinguished guest. I'm super excited. It was a great conversation and we deep dive into what's going on in the economy, market conditions, what's going on in the buy-to-let market for investors, the views of Paragon Bank, who are one of the big lenders in the buy-to-let market and one of the founding lenders of buy-to-let, and just kind of what changes are coming in the environment, what changes are coming with legislation, with the Renters' Rights Bill and the upcoming budget, and what is the future of property investing. So please listen. It's an excellent episode and listen to the end for all the nuggets that Louisa brings. So yeah, let's dive right in. Louisa, welcome. Thanks so much for joining me. I really appreciate your time. I know you're very, very busy. And so, do you want to give our listeners a little bit of background about why you're so busy, a little bit about your background within the mortgage market and what you're up to these days?
Yeah, absolutely. I shock myself quite often when I realise how long I've been in the mortgage market, which is nigh on 34 years. I know, difficult to believe, but that's how long it's been. I started my career as a mortgage administrator within Bradford and Bingley in the branch in Rochdale, because that's where I'm originally from. I have moved, but I'm originally from Rochdale, and then made my way through my career into a BDM role, national account manager role. That was my favourite. And then moving into head of sales and then director, and then where I am today, which is managing director for mortgages at Paragon Bank, which is basically anything from broker registration right the way up to and including completion. And then I have responsibility for retentions as well. So it's a great role, but it's a big gig, and which is probably why I'm slightly busy and there's lots going on at the moment.
Yeah, and for some people who may not aware, Paragon Bank are a FTSE 250 company, so they're a massive company in the UK, and there's lots of divisions and various lending and savings and things. So there's lots going on, but a big lender within the buy-to-let space, which is obviously why we're talking today.
Founding lender. So we've been lending now for 30 years in buy-to-let. So we were one, I think, a handful of lenders that co-joined to think about how they could offer finance to landlords. And obviously that, as was the buy-to-let, was formed. And Paragon were part of that, which is really good.
Amazing. And then just a quick history about other places that you've worked in the past from an experience point of view.
Yeah, so I had nigh on 20 years at Bradford and Bingley. Most of that was with Mortgage Express, so it was in the buy-to-let area specifically. I then moved from there to I did a little bit of self-employed work, so I did some consultancy work while my daughter was very young, so it was lovely. I got to spend some great time with her. And then I joined Leeds Building Society, who are a great organisation, and it was brilliant to be in the building society sector. I think they're an amazing sector. I then had my head turned and I joined Vida Home Loans, before they even landed their banking licence. I mean, you can only imagine how popular I was at home as I took that leap.
Yeah.
But it all came good. It was great, and I spent a good 4.5 years there before leaving to spend a year at HTB. And my role there was to set up a brand new residential lender, which was quite interesting because, of course, it's not something that's within their current domain. But they decided not to move ahead with that proposition, which was the right thing to do at that time. And then I joined Paragon Bank as commercial director, and then more recently, as I say, in the last 12 months, managing director for mortgages.
Awesome. So thank you. Like I said earlier, appreciate your time coming on today. And so I'm really interested to hear your thoughts, your personal thoughts, and obviously that of Paragon's based on where we are in the market at the moment. So if we just talk to begin with around the bigger picture stuff, a higher level view of the economy and the market and conditions at the moment, there's lots going on. So, at the moment, it's been a sort of turbulent few years for property investors and landlords. With inflation, interest rate hikes from what it has been and what landlords have been used to over the last few years, and obviously the impending change into regulations and some regulation changes that have come in already. How would you see the economic environment at the moment from a lender's perspective?
So I think, you've touched upon quite a few things that have happened in the past, of which we can't get away from, and I think that has knocked confidence in a number of landlords, because they're questioning, why would I want to invest in property? What's in it for me? What's the longevity of this investment, and how does that compare to maybe just a general savings account? So I think there's a lot of landlords asking themselves some pretty deep, meaningful questions. And I do think that's had a level of impact on confidence. That said, we had a bumper market prior to the Liz Truss affair. And then we had a year of downturn, specifically within the buy-to-let and the private rental sector. But it's picked back up again. And so we've had year-on-year increases in lending, and I think 2026 against 2025 should still have an element of uplift. That might be centred predominantly around remortgage, because we know this year was a bumper year for remortgages. There was a lot of customers coming off 5-year fixed rates, some of which still had a bit of an increase in rate this time, and also a sizable chunk of customers that came off a 2-year fixed rate. And we've got the same situation again in 2026. So I think the remortgage and switch market, the PT market, will still be pretty strong. I question how strong the purchase market will be in light of some of the legislative changes, and also, as we know, we're facing into a budget with lots of unknowns and lots of speculation. So I think it does knock confidence in general. But that said, there is still good margins to be made on investment properties. And so landlords that are already in it and have got enough skin in the game, I think, are still investing.
Yeah, absolutely. And we are seeing that 100%. There's a lot of scaremongering going on. I try not to listen to the news too much.
It's depressing.
Yeah, it is. It is. You have to kind of keep one eye on it just to have a flavour of what's going on, of course. But we try and speak to people who are informed and get various judgments from across the market from experienced people. So that's how we try and get our information. But it's it's not always good news there either, unfortunately. So thank you for that. It's interesting to know the runoff rates between the fixed rates, and obviously a lot of landlords coming off those, some still coming off low fixed rates and seeing increases. So that means that they would have come off a lower rate and then now switching on to new rates or remortgaging to another lender and are facing a higher rate. So straight away, their profit margins are being squeezed. Absolutely. Yes, the rents may have gone up since, or there's a pretty much good chance if they've put them up, that is, because if they've had a 5-year fix and they've had good cash flow, maybe they've had no reason to, especially if it's the same tenant that they've got in the property.
Absolutely, yeah.
Which we're seeing that's a big area for landlords to improve, is to make sure that they're doing that, and that's going to be forced now, isn't it, by the Renters' Rights Bill that's due to come in. And we'll probably talk about that a little bit more in a second. But do you see, from an interest rate perspective, obviously inflation's becoming under control a little bit now. Interest rates have dropped a little bit. Do you think there's any more scope for interest rates to drop any further, or do you think this is kind of the new normal?
So I think, it's good to split out the two ways in which interest rates are formulated. Well, there's many ways, but the two ways that we would focus on primarily, of course, you've got the Bank of England base rate, and the immediate thought is, if that is reduced, my interest rates are going to go down and all is going to be well, which we know is not necessarily the case unless you are linked to a Bank of England base rate product, of which there aren't very many. But if you are, then great, you can enjoy any downturn in interest rates. Whereas the rest of us price our mortgages very differently off what they call swap rates, which are influenced very slightly by the Bank of England base rates, but they tend to be influenced a long way in advance. So any upside to interest rate drops have probably already occurred, based on the fact that we're expecting at least one more drop this year. So anything that we're sat on just at the moment, which is kind of mid 5% rates, are probably going to be with us, I think, till about March of next year. And then we might see a little bit of a drop off. It depends, because there's lots of other factors as well, like the competitive environment. Are lenders busy enough? Are they chasing targets? Is there anything that they can do to reduce the prices? So as much as we are influenced by swaps, there are other influencing factors as well. So I think that my sense is where we are today at the mid fives, we might get down to mid fours probably by about March. But then I think that is pretty much the norm, unless we see a huge. So the swaps could be influenced by whatever goes on in the budget. So as much as swaps are lingering at a reasonable rate at the minute, they could go up as a result of whatever happens at the budget. They could go down. It's a lot of guesswork just at the moment. But my gut feel is that where we are today is pretty much where we're going to be into the new year, and then maybe some drop off. But as I say, there are a number of other factors. And if we've got some greedy lenders that want to write a lot of business, then it might be a bit of a race to the bottom. But that is only ever going to be temporary. So that's my sense of what's going to happen with interest rates, but based on lots of different factors.
Yeah, I remember when I became a mortgage advisor 15, 16 years ago, whatever it was, mainly in the residential market. And sort of 2008, 2009, we were in a credit crunch. But the advice that I was kind of always taught was, if you can get a fixed rate, a 5-year fixed rate around 5%, then, you want to bite their hand off, and that was before obviously interest rates started crashing. So, because we enjoyed that environment for so long, people have got used to it, especially the younger people coming into the market. It was a false
environment, wasn't it?
It was. And there's a certain generation of homeowners and landlords that have come in and at that level, and that's their normal. And so they've only ever seen prices go up. So the people that were around before those reductions kind of get that is a short-term environment.
On that note, we are seeing more customers opt in for 2-year fixes, because whether they're gaming the system or whether they're just thinking, you know what, I might not keep this property for the next 2 years, etc. I think it's a brilliant opportunity for brokers and for landlords, because then every 2 years you're going to have to really think about what it is that you want to do, and also, reach out to your advisors for more support. So we are seeing more and more landlords opt in for 2-year fixes over 5-year. If there's no affordability constraints, if there's affordability because of the calculations, then naturally they go for 5-year. But if there isn't, definitely 2-year.
Yeah, that's a difficult piece from an advisor, from an advice piece, as you're very aware. So it's a constant discussion around 2 years and 5 years. But that's like I said, that's an advice piece that we'll contend with at another time. So that's great. So how do you see how is Paragon as a lender seeing the overall property market? Are you optimistic about stability and growth going into 2026?
So we're thinking that it's going to be fairly benign. So we think that 26 is probably going to shape up much the same as 2025. And I genuinely don't see that there's anything that's going to change it or influence it one way or the other. If there is some more legislation coming down the line, then maybe that will influence it positively or negatively, because you can take both aspects from any level of legislation. But as it stands at the minute, we're expecting it to be fairly benign. A bit dull is probably the way in which we would describe it.
Yeah, business as usual then.
Yes, yeah.
And that's not a bad thing, because
it's not a bad thing. We could all do with some of that.
Yeah, absolutely. So you mentioned briefly earlier on about the budget upcoming. What are the key themes or policy changes that potentially may affect landlords and lenders? Do you have any inside scoop on what might be happening?
I wish I did, because everything I hear, it's just all very different. I suppose one thing that is broader than just landlords and lenders, etc., is funding. So say, for example, in the budget, the Chancellor decides to halve the ISA allowance, because in her mind, that's a sensible thing to do. You could quite easily, immediately halve funding overnight, because you've got a lot of building societies that are reliant upon ISA money. And if you're only allowed to invest half of that, it means you've got to double up your customer base. Customers may benefit because they might get a higher interest rate as a result of it. But if you think they've gone from being able to lend £1 billion to £500 million overnight. And
Wow.
and the cost of their funding increases. So even something as simple as half in the ISA allowance will have an impact, a negative influence on lending, because that's where a lot of lenders get their money from, retail savings. So if you just look at that, which you wouldn't even think about that would have any unintended consequences, but of course it does. And then you talk about national insurance on landlords. Most of our landlords are in a limited company structure. So will it impact them? No, it won't. But we know 80% of the landlords in the UK don't hold their properties in a limited company structure. So they will be impacted by it. So how does that then influence their decisions going forward on investing further or deciding to move out of that arena? So those sorts of things. We are a bank, and you mentioned it earlier, we're a FTSE 250 company. So we've also got legislation around banking, around the cost of banking. Are they going to start sticking extra tax on various, sizes of banks? Is it all going to be one size fits all? And again, you kind of think about what are the unintended consequences of that? Because if everything goes up in tax, then somebody has to pay for that. And so you have to think about how that's all kind of whizzing the plates around. So she's damned if she does, and she's damned if she doesn't. But I think she's going to have to break her manifesto. I can't see for 1 minute that she can avoid putting up taxes, and that very possibly might be the easiest solution.
Yeah.
But who knows?
And there's an argument to say they don't even know at the moment. So
correct. Hence why they delayed it.
Yeah, and so we've had a couple of conversations like this, and we don't want to spend too much time trying to second guess what they might come up with. We'll just wait, see what they deliver, and then we'll try and dissect it when the time comes. Yeah, because there will be consequences, no doubt about that. Let's hope it's not as bad as the Truss is, as aforementioned, and it doesn't crash the market like that did. So, okay, let's move on a little bit. We've touched a few things more around sort of buy-to-let investors and sort of more investor trends and what's happening a bit more on the landlord side now around like we said, there's already Section 24s come in, so that's forced some changes to landlords. There's the Renters' Rights Bill, which is obviously we're going to talk probably a little bit more about that in a second. And interest rates have increased. Are you seeing landlords changing the way they kind of operate now? Are you seeing more remortgages, refinancing, portfolio restructuring? Are you seeing a lot of that?
So a lot of our landlords would already be slightly complex. And so they're probably thinking about, do I do more HMO business? Because actually a yield on a HMO is better. Do I do more multi-unit blocks? We're starting to see some landlords moving into the semi-commercial space, and that's kind of your shop with a flat above it on a high street, which is great, especially if they can rejuvenate the high street. So we are seeing some landlords that are trying to move into that space because, again, they're higher yielding properties. A number of our southern-based landlords have moved up north. It's a great place to be, but that's because I live there, so I'm bound to say that.
Yeah.
But naturally, the yields are higher, but then the properties are not without their challenges, and capital appreciation is not as great as it is maybe in the south and the southeast. So I think you've got landlords that are actually just waking up and saying, right, okay, I really need to put more thought into my transaction. Whereas historically, I would suggest that it was probably just a transaction. Whereas now it's like, how long have I got to stay? How long do I want to stay in this industry? And then what does that look like? So we are having more conversations, in particular with our portfolio landlords, because we are in regular contact with those big portfolios, as you would expect. So we're having regular conversations with them. There is a little bit of diversification. We haven't seen them leaving the market, but we are seeing them thinking or rethinking their property portfolios. Holiday lets, for example, despite the bad press, are still a really good, solid investment in the right place. So you kind of think that there are options available to these landlords that they're exploring more than I think that they have done historically.
Yeah, absolutely. And I think one of the key things we try and speak to people, we get a lot of people who are first-time landlords who want to get into property investing and build a portfolio, and just really making sure that they understand what's involved. And this isn't just, like a property for Christmas type of scenario. This is for life. You're making an active decision now this is a business. And are you prepared to run a business, and do you know what it takes? And I quite like some of the documents that some lenders make, that there's some business plans that they want you to see and kind of understand how they're going to fund it, what your model is going to be. And it actually makes people think in more detail. I think too many people in the past I probably just got into property because someone down the pub said it was a good idea.
Agreed.
Thankfully, not that many people go to the pub anymore, so they're not getting that advice. But they're getting it. I'm not sure where they're getting it from now. But the fact being, I think one of the good benefits of the changes that have come in is it's actually forcing landlords and investors to be more professional, and that can only be a good thing from a tenant's perspective, but also for themselves, so they understand exactly what they're getting into. Have they thought about the location? Have they thought about the tenant profile? Have they thought about the type of property they want to invest? Do they want to do work, or do they want to buy a new build that doesn't, EPCs, we'll talk about that in a sec as well. But there's so many things that go into it that actually you need to take the time and consider. And we are seeing some of our landlords restructuring the portfolio a little bit, paying down some debts, maybe reducing the loan to values, maybe selling one or two to lower yielding properties, and like you said, just rebalancing the portfolio. So yeah, it's interesting to see what that is.
The SS 1316 rules, which we were all like, this is going to be the end of buy-to-let, it's never going to work. Actually, if anything, it's enhanced the experience for the landlord as much as they might have to fill in more forms. But you're right, they've got a greater understanding. If they have to have a portfolio schedule, and that's the worst thing that somebody's ever going to have asked them for, after SS 1316, you kind of go, you don't understand what's in your portfolio, so how can you be running this as a business? So I think you're right. We've seen some of the propensity to default scores and the quality of the landlords that are coming into the market. It's very, very different since the changes of legislation at SS 1316, when obviously all the affordability pieces came into play. So without a shadow of a doubt, that piece of legislation, which felt like it was the end of the world at the time to implement, has had a massively positive impact on landlords, on the private rental sector, and on tenants' experience. It's all been incredibly positive.
I'm amazed that landlords that we get, portfolio landlords, they don't have a portfolio schedule. They have it just baffles me. But I think something you mentioned earlier on is all of this legislation change has forced landlords to start asking themselves those deeper, meaningful questions and going, right, where am I now? What do I want? And where am I going in the future? And why am I even doing this? I think, am I doing it for pension? Am I doing it to leave it to my kids? Am I trying to retire? Because I think when you understand the reason why you're doing it, it makes a lot of those decision-making processes a lot easier to decide whether you're going to grow the portfolio, whether you can keep it as it is, or whether you're going to maybe sell up. And, a lot of the talk about landlords leaving the market is generally around the older market. But I think in any market, you get people who leave the market and you get people who come into it, because naturally through age and retirement and things like that anyway. And those landlords that have had it good in an area of low regulation, low interest rates, the properties are owned in their personal names, all of these changes that have come in, they're probably thinking, well, I'm due to retire anyway. These are the forces that are just pushing me to maybe do it a little bit sooner than planned, and let new blood come in who have their eyes wide open. They know the rules of the game and they've changed, but that's all they know, and they haven't had the good times of the past. So it is what it is. But rents are going up all the time, so there is also opportunity.
There absolutely is. I mean, we've looked at the age of our average landlord. Used to be 53, and in as little as 4 years, that's gone down to 47. So you can see that we're getting investment from new people or younger people coming into the market. We have a great proposition whereby if you've got a landlord that holds their properties in an SPV and actually wants to get rid of the properties, whether they come in to retire whatever's going on in their world, we'll allow an intercompany sale. So you could actually, another landlord that has an SPV, again with us, could buy the properties through the SPV as opposed to transaction. Each of those, also they buy the shares in the SPV.
Share purchase. Yeah.
Yes, obviously tax advice would be appropriate for anybody even thinking about that. But, trying to think about solutions to retain as many landlords as possible within the private rental sector and as many properties, you're going to find lenders becoming more and more innovative around solutions like that. And, we do see landlords that want to retire. And the last thing that we want is for those properties to go out on the open market because they might be swept up by another investor. Brilliant. But they might not necessarily be the case. And then, we know that there's already a shortage of properties. We don't want to make that worse.
And one of the difficulties we see with portfolios that are trying to be sold is that generally the seller wants to sell it to one person and sell a portfolio as a job lot. And who are the people in the market to buy a portfolio? It's other investors, and generally other investors won't want to pay market value for a portfolio because of the complication in nature, changes in market and things. So they want a discount, and then it doesn't really work that way necessarily. So yeah, it's a surprising difficulty with the value of a portfolio, isn't it?
It is, and even worse if it's distressed or you've got, no tenants or you've got sitting tenants, all of these things that add complexities, which is why, as I say, if you can get an SPV by another, shares in another SPV, sometimes it works quite well. But yes, we need to drive forward some innovation to try and retain as many landlords as possible in the private rental sector.
So having said that, then that was probably a good time to discuss the news of the moment, the big legislation, the Renters' Rights Bill. How do you see that's passed royal assent now? And so we are just basically waiting for confirmation as to when it'll come in. Obviously, we already have in Wales Rent Smart Wales. And so this legislation's been in place for over 5 years now. I think it's about 6 or 7 years. Scotland has their own version as well. So it's not necessarily new to those people operating in those countries. How do you see this impacting the market in England?
So I think I spent a lot of sleepless nights talking about this and stomping around a number of ministers and the Lords, telling them that, woe betide if they were to launch this new Renters' Rights Bill. It was going to be the death nail of the private rental sector. And for a period of time, I think the whole of the market felt that was exactly what was going to be the case. And I probably was, a founder member in that thought process. However, if you look at what they want to implement or what is to be implemented, actually, if the landlord is doing their job properly and they're doing it in support of the tenants, and they've done enough vetting and they know who they've got in their properties, I actually don't think it's going to be a problem. I think it's just more governance, and maybe some extra forms to fill in when the database becomes live. But to be honest with you, as I say, having stamped around and been very grumpy about it for quite a long time, I think the output is going to be okay. The problem that we're going to have is around implementation. So if they insist on implementing it really, really quickly, when the market's not ready for it, then it'll probably cause us a problem. And you will start to see some landlords go, do you know what? I just can't do this in the time you've asked me to do. I'm not willing to acknowledge or accept a £7,000 fine for not adhering to it. So I'm off. So I think that if it's not implemented properly, then we might see a number of casualties. My sense is, and again, I've sat and thought about this for a long, long time because it has been coming for a long time, and I'm very passionate about it. I actually think that the people that will be worst affected by this are the tenants and not the landlords.
Agreed. Yeah.
Because as a landlord, you've got 12 people knocking at the door for your property on average. Some there won't be a queue, but for the vast majority, there's a lot of people. Suddenly you're just going to be that little bit more selective. So if somebody can't pay in advance, then you go for the one that's got a really clean credit history, that can prove that they've got the ability and willingness to pay, as opposed to maybe a newly divorced woman with 2 kids who could pay in advance, you're just suddenly going to deselect against those customers or those tenants that probably are more deserving of those properties. So I actually think that the impact will be felt greater on the tenant community and less so on the landlord community. I hope that is not the case, and I hope that we get a balanced output of this where everybody's happy with the whatever happens with this legislation. But my gut feel is that the landlords will just carry on as they are, having made a few tweaks. If they've got properties that are not hitting the decent home standards and they haven't, and Awab's law is going to impact them, then they shouldn't be a landlord in the first place, is my opinion. So actually, those things will just be fine. And I just think there'll just be a bit more governance around what they do. So that is my sense. And I think, my colleagues within Paragon were less passionate about it than I was, but obviously I was in the coalface. But I think the sense is pretty much the same. And when I speak to some of my peers around the industry, now we've come to terms with it, I think we all pretty much feel we're in a similar position.
Great points. And I think just touching back on what we said earlier, it's about professionalizing the landlord, isn't it? And, a bit more admin, but actually making sure that things are being done correctly, the property's being looked after. I think one of my bugbears around it is the way that the tenant behaves within the property that causes some of the damage within the property, so mold and damp and things. That needs to be looked at. That's not black and white by any stretch. And I think those are the kind of this is where I see the issues with it. And then obviously not being able to evict tenants, so no fault evictions. I read, I think over the weekend, that the number of judges or courts or that will be dealing with these agreements or misagreements, there aren't going to be many. So there's going to be a huge queue and backlog of
tribunals.
For the tribunals. So that's going to be an interesting to see how that pans out. And ultimately, like you said, what landlords will do, they'll just say, do you know what, I can't do this anymore. 80% of the PRS, like you said, the private rented sector, are accidental landlords or landlords that only own 1 or 2 properties. And so those are the types of people kind of will go, they're doing it part-time, they've inherited a property, they bought another property and kept that one and rented it out. And so they'll say, you know what, I don't want to go through this process, I'll sell. That leaves another problem for renters. And like you said, the very people that this was due to help is going to end up costing them, because in a market where rents are already increasing and you've got people queuing up to rent those properties, you sell those additional properties, supply and demand, less supply of buy-to-let properties on the market forces the rents up again.
Of course it does. Yeah.
And so
easy maths, isn't it?
It is. And again, this is one of those unintended consequences, isn't it, of this bringing in legislation. And then there's another area of the market, which is obviously this is very current because this is going through the news at the moment. We also have another force at play, which I know you're also passionate about, is MEES and the EPC and the green agenda, and how that's going to also impact landlords, yes, again, because they're going to have to make some decisions on what they're going to do with their portfolios, but also, again, that's going to impact tenants as well, isn't it?
It is. I mean, obviously they brought out the 2 consultations, one at the early part of this year and then one slightly later. So they've got both MEES consultations. One is around EPC reform. So this is the bit, are our EPCs fit for purpose? I think we could probably all agree for the most part they're not. They're a crude measure, but it's all we know. So, you kind of work off that. So if they're going to do any changes to EPCs by way of the EPC reform, what does that look like and when's that going to be implemented? And so the expectation is any changes won't take place until mid-2026. So any reform or us learning what a new EPC might look like, even if it's called an energy performance certificate, what does that look like? What does that mean to us? Have we got enough EPC providers? All that sort of stuff that's going to go on. But that's fine. I think everybody would agree that an EPC reform is fine. But then, of course, they then issued the consultation on the EPC standards, which was any new tenancies need to have an A to C rated property by the end of 2020. Oh, sorry, by the beginning of 2028. It's actually the end of 2027 because it was from the 1st of January 2028. So that's not 2028 to me.
No,
Anyway,
it's not.
so that was the first date. And then, of course, existing tenancies at some point in 2030. So my concern with this is that timeline is just too tight for anybody to even think about achieving that timeline. If they want to be impactful and improve, our leaky properties, why focus on only 19% of the market? Well, that's because the rest of the voters are less likely to be impacted. So, it's my sense. So, and they think that landlords have got very deep pockets, which, of course, pockets are becoming more and more shallow as changes to legislation and interest rates, etc. So I think that maybe they're barking up the wrong tree is my first sense. But the second sense is there's no way that we would be able to make those changes because a lot of the properties are not going to ever be an EPC A to C, and you can spend £15,000 on it to realise that, and still not hit your minimum standard. And also, we don't have enough tradespeople in the UK to actually do this work. So even if you're acknowledging that you can do it and you want to do it and you've got the finances to do it, who is going to do it? Because they're busy not building the 1.5 million homes that have got to be built in the next few years. So my sense is that it's just not doable. I can understand the sentiment behind it and why we want to improve these leaky properties, but I just don't think it's remotely doable. So there's various things that you could suggest. Why do you put the date out to 2030? Why don't we just focus on fabric first and just get the properties ready and insulated? That might well be a much cheaper way forward, and not think about heat pumps and solar panels and all the other stuff that we're trying to think about. So I think that there's been some really good responses to the consultation. I've seen a number because I sit on the UK Finance Working Committee for Buy-to-Let, but also on the Product Services Board Committee. And I also join a number of working groups. So I've seen the output of the response to the consultation, including the Paragon response, all of which are very, very similar. So my sense is that what they're suggesting probably won't be implemented, but within their manifesto, they said that they would improve the standard of the properties in the private rental sector by 2030. So they will do something, but I'm just not entirely sure what that's going to look like. It worries me immensely for the very reason that we cannot afford a reduction in properties in the private rental sector, and this potentially could lead to that.
And that was the other thing. They said they were going to build, and that hasn't happened either, is it? So
no, we have it. There's 2 million households sat waiting on the social housing waiting list, and they're not building any houses there either. So all of those people are either sat in the private rental sector, sleeping on somebody else's sofas, or on the streets, and that is not a great place to be when you've got when we're just not housing our people.
And there's so many things, leaving when we left Brexit, a lot of those workers forced, a lot of the labour was forced out of the country. And obviously during COVID as well, that shift definitely happened. And now we're in a place where we haven't got the staff and the workforce, have we? We haven't got the labour. The cost of materials is crazy at the moment. And so the inflationary pressures there on actually building things. I know a lot of people, developers who have just sort of sat on their hands because they're just saying it's just not worth, and not so much sat in their hands. They cannot physically make projects work because the cost of the land and the cost of renovation or build is cost more than what the value of the properties will be once they've finished. So
yeah, absolutely. We have a development finance arm, and that's the sort of feedback that we get from the development finance team, that it's just, unless they're a very big business and they're turning these things around really, really quickly, it's really difficult for an SME builder. We know that a lot of them have left the industry anyway, and probably more to come. And all of this is eating into the number of properties that we're bringing new properties to the market. So yes, it's scary stuff.
Absolutely, absolutely. So in terms of Paragon then, you obviously very well known for helping professional landlords. How has that changed in your eyes? Are you seeing are you seeing many new entrants into the market? And who are you looking to support most at the moment?
So as far as new entrants, as in customers, come into the market, we are seeing more, and they've got some weird and wonderful complex structures, which are great for us because we love to get our teeth into the weird and wacky. And we are seeing more of that. And I think that's as a result of landlords getting better tax advice, which is great because you would never have seen a landlord 10 years ago seeing a tax advisor. Why would they? Whereas now I think, they're taking some really good, strong advice. So we are seeing some weird and wonderful structures which work for us because we understand them, having been in the market. I've said to you about HMOs. We're seeing some larger HMOs, again, coming into the mix and multi-unit blocks. So we're starting to see landlords, I think, investing differently based on advice that they've been given, which is also really helpful because it's not the advice from their mate who's just bought them a pint in the pub, which we referred to earlier. These are professionals that are getting professional advice. So I think that's really good. The market itself, it would have typically been a two-horse race in so much as you'd got a number of lenders, so probably a handful of lenders that would lend to landlords who bought properties in a limited company. And then you would have a whole raft of mainstream type lenders that would lend to your typical accidental landlord or a landlord that just was buying one or two properties in their own name. You've seen definitely a shift towards lenders moving into that limited company space. And why would they not? If that's the direction of travel for the market, then why would they not? It makes life more interesting for me because obviously we've got to try and continuously think outside the box and keep ahead of the game, which is not a bad thing. It keeps you on your toes rather than just lazily trotting along in the same market. So, it is interesting. I think it's also really good for landlords because it's giving them more choice. So if you had a landlord that wanted a holiday let, 5 years ago, they probably would have been to the principality, and that's probably as good as they could get.
Yeah.
Maybe another couple of small local building societies, whereas now it's a bit more of a mainstream product. It's still not massively mainstream, but it's better. It's certainly better catered for, as are limited companies. And again, you'll know this from your advisor days. You would kind of go, you'd see a landlord that held a property in their own name getting a cheaper deal than a landlord that had it in an SPV because it was deemed to be more of a risky transaction, which I don't tend to agree with. I think it was more taking advantage of a market. Whereas now what you've got is you've got hardly anything between the two on price. So there is definitely an incentive for landlords to incorporate in some capacity if they're able to do, or to at least start to buy properties in limited company. So I think it's a good thing for landlords, and more competition is always good for landlords in many ways because, as I say, we really have to be on our game to make sure that we carry on supporting the right landlords and giving them something a bit extra. And it's good for the confidence in the market as well, because if you can see a big lender like BM Solutions moving into limited space, then it's clearly got to be a space that's worth entering into. So actually, I think it gives a lot more confidence in the market as well. But it's not without its challenges because it's a very competitive arena.
Yeah, I think it was last year there was a record number of limited companies set up or incorporated in the UK, ready for buy-to-let purchase. So that's really encouraging. And obviously, BM, as you mentioned, BM Solutions, one of the biggest buy-to-let lenders in the personal space, the personally owned space, who promised that they would never get back into the limited company arena. So that's an interesting one. And obviously Coventry via Godiva, they've also, so two huge players entering the space, like you said. So that shows the sentiment. TMW have moved back into that space as well, another huge lender. So there's definitely scope. They will do more of the vanilla stuff initially, but I'm sure that scope will change. But it just goes to show that that's where things, from an advice point of view, when someone comes to us and says, "Oh, right, I want to buy a buy-to-let," before we do anything, the first question is, "Are you buying this in a personal name or a limited company?" Mm-hmm. Personal, I don't know, or this right. Well, we need to understand if it's personal or right, or they might have an answer, but we need you to come and tell us that because you've had advice. Because it's not we are not tax advisors, we're not tax specialists, we're not accountants, and so you have to go away and come to us with that advice to say and because we don't want to go, oh well, it doesn't matter, well let's just do it in a personal name, or let's just do, we'll go with what you tell us, because we don't want that to come back and bite us, further down the line.
And if it's wrong, it will come back and bite you at some point. But like you say, absolutely critical for landlords to see an experienced tax advisor and a mortgage broker, because they've got so many different opportunities to look at different deals that a landlord going direct to their lender just doesn't have.
Yeah, absolutely. And the other thing, one thing we are seeing is actually people overcomplicating things. They've come to us with sort of group structures and this, that, and the other. And you think, what have you done? I said, oh, well, I was told this, and this. And I was like, right, okay. And then you just got to try and unpick all of that. And so it then massively reduces your option. But I think there's still a huge amount of scope for lenders to increase for the spaces, like you said, limited within the holiday let space. There's never been a huge amount of lenders, but with the rise of Airbnb and short-term stays, that's increased. So those options. But up until recently, if you wanted that in a limited company, there's fewer options again. Yeah. And then if you want a multi-unit block as a holiday let, you literally got a couple of options. And so there are still lots of areas that lenders can compete in to pick up some of that business, especially more in the specialist spaces. So really exciting times in that sense. I think, like you said, there's plenty of opportunities out there to do that. And hopefully with that increased in competition, that will help drive down the rates a little bit for landlords.
Inevitably, yeah.
And maybe, if not rate, then maybe criteria might get loosened to win some of that business.
Yeah, it's inevitable, isn't it? It's if there's too much supply and not enough demand, then people have to adapt. If there's too much demand and not enough supply, then less adaptation is needed.
You touched briefly on obviously the importance of using a broker. What's Paragon's stance on how much business do you guys get via intermediaries or brokers then for the layperson versus direct business?
So 99% of all of our business is intermediated. The odd case that we get through, which comes directly from a landlord, it'll be from an existing landlord that just says, I'm quite happy, I know what I'm doing, I don't need to use a broker, and we'll allow them to use us directly. We don't dual price, so we're not going to do it cheaper for somebody to come to us directly, because that would be catastrophic, and you wouldn't do it. Where we're not as strong, I think, is on PTs and retention. So we've got really high retention rates, but not all of them come through brokers, which baffles me, because it feels like it's the right thing to do, that these landlords still need some degree of advice, but not all brokers. And also quite interesting, we find that the brokers that talk to us more regularly are talking to us about the larger loans, and the smaller loans they don't tend to pay as much attention to. Read into that what you will, but certainly we absolutely advocate brokers, and we want more of our landlords to talk to their brokers, because we need to make sure that they've got the right advice, and we are not going to give them advice.
And the system's good as well. It's, when deals are up, it shows you if there's a potential to do further
Super
advances
easy.
as well, to potentially raise money if they want to go out and buy more property or whatever, increase or do upgrades to the properties. So there's definitely conversations to be had there at all times. So that's excellent. So in terms of kind of the future now, how do you see things changing into? We talked about the landlords diversifying into sort of slightly different property types. Obviously, we talked about EPCs and MEs and things like that. What's your sort of one piece of advice to investors looking to buy or expand their portfolio going into 2026?
So I think you've already touched upon it there, Gareth. Just make sure they know exactly what they're doing, because it feels exciting and sexy that you're going to go and buy a house to rent out, and isn't it going to be great because I'm going to earn all of this money? But there are consequences, and there is a lot of challenges around renting out a property and doing it right. So I think that getting the right advice, knowing exactly what you're doing, go into it with your eyes wide open, it's still a really good investment and the yields are really, really strong. But you really need to know what you're doing. And I think that there is still an element of naivety based on, just the thought of having a property to let out. It's not as easy as it sounds, but it's a worthwhile transaction. So I think for me, it's just about making sure that they do sufficient homework.
Amazing. And Paragon are obviously going to be a big part of that going forward.
Oh, yes.
What excites you about the opportunity over the next couple of years?
So I think that at Paragon, we've always been a little bit different in so much as we've always kind of pushed the envelope very slightly and come out with some real innovative solutions, and that will continue. So I sit in regular meetings with with the team to talk about what is it that we're missing in the market. There is no silver bullet. There is nothing fundamental that is missing in the buy-to-let market. It's all pretty much catered for, but there are snippets of, like you talk about, holiday lets and expats and various things like that. So there's elements of it that isn't catered for as well as it could be elsewhere. And there's things that we could do better as a business regularly. So we talk up all the time. It'd be difficult to not have a conversation without talking about AI and about technology and how that might influence things going forward. Technology is evolving massively. We've just completely, restructured our front end originations platform. It's great. It's got loads of API links. It's got AI doing this, that, and the other, and it's fabulous. And it's a much better journey for both our customers and for our brokers. So we're happy with what that is. But then we're going to continually have to develop that, because you can't just rest on your laurels thinking that once you've put that out there, that's all it needs, because somebody else will make theirs better. And, you've got to continue to keep a close eye on what's going on with that. So I think technology will evolve. I think it'll evolve for the better. I think it will help facilitate better transactions for customers and for brokers. I don't think it's going to be the death nail of the broker. I think it's just making brokers utilize their time more effectively, which is great. They can talk to more customers for longer, which is exactly where I see the upside of it. And I think that is going to be over the next couple of years. I don't think this is a 5-10 year plan. I think this is 2 years out, and we'll start to see some massive changes, which is exciting. It's good for everybody, because I do think the customer journey will be improved massively. So there's a lot to do. Can't rest on our laurels. I don't think there's anything fundamental other than within the legislation environment that anybody can change that's going to make that much of a demonstrable difference. The legislation, whatever happens, will drive different outputs, but I think from a lender's perspective and from a landlord's, there'll be the constant evolution and the changes, and how can we just make things better and more appropriate for our landlords going forward.
Yeah, and I agree. I think, there's a lot of doom and gloom. There's obviously the government. Landlords are an easy target. Like you said,
Yes.
it's an easy target from a voter's perspective. They think landlords have deep pockets, which, like you said, is crazy over the years that they've had recently. But I am positive and I am optimistic for landlords, because ultimately, as you mentioned earlier, there's 2 million people who are waiting for a home to live in. Those 2 million people aren't going to buy their own properties to live in themselves. And so where are they going to live? The government is not providing those homes, which there's a shortage of housing. There's, like a housing crisis that's been talked about all the time. We see on the press about the immigration issue as well. And so there is a huge, huge demand for housing. There's potentially some landlords that might be exiting the market, which will reduce supply in the PRS again. And so those who are prepared to go the whole hog and go long term with it and take a long term view on it, I've got a great opportunity in my mind. Eyes wide open, look at the tax implications, look at what you need to do as a landlord, look at the changes that need to come into the property in terms of its energy performance, and buy, strategically and with a plan, and you're all set. But it's not, like you said, it's not easy, but there's plenty of help out there, and there's lots of different options. And so, yeah, there's a great opportunity in my mind.
Yeah, agreed. And I mean, there was a stat that I saw a few weeks ago. The ONS have said that we need 5,000 new people to come into this country through migration. 5 million, not 5,000. If it was 5,000, it'd be easy. 5 million between now and 2032. And we know that of new people that come into this country, 85% of them rent. So if you think about that growth in population, we also know that we've got a lot of aging people that are sat in rental properties. So the demand for rental properties is just going to multiply enormously. So for me, the opportunity for landlords, you've already said it, for the landlords that are doing this properly and going with their eyes wide open, it is a brilliant opportunity.
Yeah. So hopefully there's plenty of business for, for Paragon going forward, and hopefully for us as well. But like you said, we are certainly not in the game of trying to make this all look rosy. We're realists, and we want to make people aware, and that's the purpose of the podcast, is trying to educate people on where the things are in the market, who the lenders, who the big players are, tax advice, EPC advice and things like that, because we're just trying to educate people, because we want them to be good landlords, and in turn, if we can help them be good landlords, hopefully they'll be good clients for us long term. That's the reason why we started this, and we're trying to educate as much as we can. So look, I'm very, very grateful for your time coming on today, Louisa. I know, like you said, you're very, very busy, so we really appreciate it.
Thanks for solutions.
Sharing. Yeah, that's it. And look, it's been very, very lots of knowledge and very helpful to our listeners, and we really appreciate it. So thank you very much for your time.
My absolute pleasure. Thank you so much.
If anyone wanted to sort of follow Paragon or get advice or anything like that, can they follow you, or is it on social media or anything like that? Or what's the best way to follow you or Paragon Bank?
So the best way to follow us, I think, is on LinkedIn. So there's a Paragon Buy-to-Let Mortgages on LinkedIn, which is great. We put loads of our reports on our website. It's great. There's lots and lots of really good, useful education on there, and obviously on LinkedIn as well. I too am on LinkedIn, but you probably won't get as much from me as you will from Paragon. But there's some really insightful stuff on there that we release regularly.
Amazing. Thanks, Louisa. Really appreciate it. Thanks for your time.
Thank you.
Wow, what a great episode that was, and very grateful to Louisa for her time and sharing her knowledge and her thoughts on where the economy is at the moment. A couple of key takeaways from me really were the potential interest rates dropping next year, possibly below the 5% mark, which will be great for investors and landlords alike. Obviously, being on top of what comes in from a renters' rights bill and keeping one eye on the changes to the EPCs, those are really key things for a landlord and investor to keep an eye on. And ultimately that the opportunity is still there in the market. ONS data, that was a staggering stat that, we'll be looking at 5 million new people by 2032 to migrate into the UK, and of which 85% will rent. So when the supply and demand of rental stock is already under pressure, keep bringing more people into that market will be very exciting if you're a landlord in the market. So now's the time to go out there, be greedy when others are fearful, and grow the portfolio and make sure you've got good, solid stock so that the demand will always be there for you. So it's all about location and getting the right properties. So thanks for listening. Really appreciate your time. If you liked this episode, then please like and share it with anyone that you might know that might be interested. We really value taking the time listening to it. So we look forward to seeing you on the next episode. Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.